Venture capital is typically a more senior people's business, and the managers of venture capital funds are typically more senior. However, things are changing. More and more young people are entering the space, and more managers are actually young. Today, we'll be talking with Rokas Peciulaitis, who is a founder and a partner in a VC fund, Contrarian Ventures, fund which specializes in investing in a climate tech industry. So let's begin. Welcome to the Young Executive Podcast, the inspiration, advice, and lifestyle podcast for millennials and Gen Z, today's and future's executives. Hello, Rokas.
Hi, how are you?
I'm well. I'm just curious about you. You're just back from Miami, and seems that you are just...
No tan, unfortunately.
Okay, so you just ran into the studio in a rush. So how was your day today?
Good, actually. Yeah, pretty stressful, I think. Apparently climate change is real, so Turkey had some unprecedented snow and got all the flights
canceled. And Greece as
well.
Oh.
Yeah, exactly. So we're getting snow in places that we never thought of the snow, so probably changing holiday destination anytime soon.
Okay, but Miami, was it for a holiday or?
No, it was actually for work, part of this Kaufman Fellows program, and we had an in-person meeting for 4 days. So that was amazing. It's 200 people, 200 plus VCs in one building, so definitely a lot to talk.
And by the way, we are in Lithuania, Vilnius tonight, so just to give you a sort of a geographical indication. So Rocky, I'd like to get back to this acronym VC. First of all, what does it mean, just for some of the audience?
Yeah, so venture capital. In simple terms, I think VC stands, again, for venture capital as such, as an industry, is actually not that long, to be honest. And it's interesting, the backstory of venture capital is it used to be a construct taken from actually whale hunters that they would get on the boat, and they would go to hunt whales and basically sell the kind of what they would catch in the market. And they would get firstly, it would get an investment, and then it would get a success fee. So the kind of management fee and carry, which is how we're getting compensated. But to come back to the kind of what a venture capital is, it's really a pool of capital that one manages to invest on behalf of other investors into predetermined strategy. In the construct, there could be an early stage strategy, late stage strategy, or geographical constraints. So you primarily look for technology companies according to your strategy, and you give capital to those companies, invest in equity or quasi-equity, and you hope to build a portfolio according to your strategy and then make returns for your initial investors in the fund. So basically searching for great companies, backing them, growing them, and then subsequently selling them.
And in your case, there is a hashtag climate change.
Yeah, so we're, as a venture capital firm, Contrarian Ventures, we're a sector-focused fund, meaning that we focus as part of investment strategy to a specific sector. In this case, it's climate tech, so technologies related to climate change or mitigation of climate change. And we are geographically also constrained fund from a strategy perspective. So we choose to invest only in Europe plus Israel as our geographical constraint, or let's say optimal place where we look for companies. And we also specialize in early stage, meaning we invest in companies ideally at seed stage. Sometimes we could take some risk at pre-seed stage, meaning pre-product. And some instances where we miss at seed stage, we go to invest in later stage, meaning Series A, where usually companies have product market fit.
So let's get back to the very beginning of the Contrarian Ventures. I think back in 2017, if I'm correct.
That's when it was founded, yeah, correct.
So how it all started?
Yeah, so I think...
okay, age matters in our podcast. Yeah. So how old were you back then? Because this entire VC industry is grown up, let's put it this way, guys, traditional business, like these businessmen, not entrepreneurs. Now things have been changing. So, what's the story behind?
Yeah, so I think there's obviously a pre-story to Contrarian Ventures for sure that is also very much relevant to, how my career from that point onwards. But maybe I go prehistory even to the fund. I think that's relevant for Construct. So I grew up in Lithuania, in Kaunas, which is the second city. I went to school there. When I was 18, I left to study in University of Glasgow in Scotland, while I did a 4-year degree in economics. And then in between, I did a year abroad in California. I think that was sort of maybe a first time that I actually encountered companies, and actually met at the time someone called someone that created, his name is Kevin, who found a company called DoubleClick, which is actually fundamentally how Google came up with a derivative to price their product in AdWords. It was later acquired by Google, actually. And yeah, that was probably when kind of LinkedIn was taking up front. The majority of great products built, and that was year 2011. And I graduated in 2012. I think for majority of my university, let's say, time, I was very fascinated by trading, and I kind of wanted to do a career there. I did a bunch of internships in leading investment banks, Morgan Stanley, Merrill Lynch, and
that's all in the United States, or
that's actually was in Europe. It was actually in London. And then after that, a bit of a detour to my career, which was something that at that time was, I mean, contrarian in its own nature. I went back to Lithuania for some time before I started working full time in Merrill Lynch later, and I did this program called Create for Lithuania, and that was I would say, apprenticeship type of program, working in the government. I worked in Ministry of Economy, Ministry of Energy, and also Enterprise Lithuania, which sits under sort of Startup Lithuania, you can call it. At that time, it was even just foundations of it. And that was sort of my second interaction with technology companies, and then I met some people that I can call, to a certain extent, my mentors, some of them in Israel, and I started to take interest in that because for majority of my university career, I was predominantly focused on, I would say, trading and capital markets. And I went to start my career in Merrill Lynch in trading. So I traded something that would be very much relevant now, inflation derivative products.
Okay, that's we'll try to explain later on.
Yeah, so I traded various funny derivatives that can price inflation and that or are priced off inflation indexes. So I did that for a better 3.5 years, I think. And I came back to Lithuania actually in end of 2015, and kind of with the, I would say, delusional idea to potentially think about starting a fund, which at that time I think I was probably 25. And somewhat that materialized, and fast forward to 2017 July, we set up Contrarian Ventures and started investing. So at that time, yeah, indeed, it was I think it was my first kind of settling experience in venture capital, and in the fund that we created at the time was 6.3 million when we started off. And that's how sort of the journey started. Obviously, there are some gaps that they've been shaped, obviously, a lot of my career, but in reality, it was sort of from trading desk, which was necessarily a very, very different career path to something that, at least ideologically, I found very interesting and rewarding. And I think it was between the intersection of being able to still continue investing and building company at the same time. Because in a nutshell, we still have a company to build. It's not, people refer to funds as something that they go and manage and that's it. But behind that, there is a company building element to it as well, especially in venture capital, I believe.
Speaking of the fund itself, we mentioned that it focuses on climate tech companies. Yeah. So then again, how it all became part of the investment philosophy and I guess the distinction. Yeah. And back then, 2017, we had climate change problem, but as far as I can recall, I think
it was only Al Gore who was fond of that problem at that time.
Yeah, that's the thing, because the capital was not there dedicated for that purpose.
True.
So that's very contrarian. And besides, what is the contrarian? Can you explain? Because there is a description what is in the investment sphere.
I think for me, when I kind of thought about the name, it was twofold things. It was definitely contrarian to raise a fund in, let's call it climate tech. At the time, I wouldn't say that was climate tech necessarily defined. It was more energy mobility / clean tech. That was also seldomly referred to as the first part of clean tech revolution back when solar was relevant back in 2006-8 period, which not necessarily ended well. So I think there was a lot of scars for investors where people lost money back in those days. And so coming in with someone that has features of no track record in a particular area, investing in a space that is not particularly well perceived by limited partners, meaning investors in the fund, and doing it out of Lithuania was somewhat definitely contrarian, and especially when you're going in the industry that is heavily dominated by large players, oil and gas companies, utilities, and you're someone at 26 without prior experience in energy, is somewhat was contrarian to myself personally, more so than the strategy itself. And I think that was something that I think I'm an avid reader, and I like Peter Thiel in general and his kind of contrarian bets, and he was definitely lived up to expectations of being strategy-wise contrarian. I think for us to live up to expectation of being contrarian to a strategy, I think I probably need 10 more years to be fully vested in that and adequate capital to make those bets. I aspire to that at some point in time, but yeah, still a lot to be proven. And that's how sort of, I think the logic of contrarian being that was just at that point of time, for me personally, that was very much contrarian from all angles. And yeah, to the other point of the question, I think really at that time, surely that was not perceived as climate tech, how we articulated. So for context for listeners, the biggest investor in the fund is the largest utility or energy company in the Baltics called Ignitis Group now, and they're the largest investor in Fund 1. And I think the kind of predominantly from a strategic angle for them, it was that we focused on energy and mobility, and those were the two core areas. I think the way we define our climate tech, we invest in everything other than agriculture and food. Not that we don't think it's relevant, but I think the way we construct our thesis is that we believe that the last 100 years commodity of choice was oil and gas, which are fossil fuel. And then we believe that the next 100 years will belong to electron as a commodity of choice. So we invest in everything related to energy, mobility, industry, and building, and then crossover technologies and new business models. So it's kind of niche, but at the same way it captures 80% of all the emissions that we have globally.
So let me ask you about two aspects of starting this type of fund. First of all, how did you convince, let's say, the utility company? Did you go to the CEO straight away, say, "Hi, I'm this guy, and with this XYZ big names behind"? That wasn't necessarily the case. So actually, they sort of made the decision themselves that they want to have an external manager to run this, and they went through I would say open call for a selection of manager. I think we're in comp with other potential managers, and we just had a better offering and won that mandate. So initially it was mandate. It's purely LPGP relationship. So we're fully a separate entity, and we manage that money. It's just that they're the largest investor in the fund. Again, we've kind of approached it through different lenses than other people. I think at that time. We saw the opportunity. We saw what was necessary to build a successful strategy or a successful manager. And we have great people that at that time helped me as sort of advisors and venture partners, what we call them, from Israel, Netherlands. And that was sort of a syndicate that went into it and really made us to win that mandate when we started back in 2017. So I think you could say that person that made the decision, I think at the time, the CEO, I think he understood the kind of importance of technology back then in the construct of their business model. And this was ability to source the best technology ideas, as well as from a strategic standpoint, make them work with them and implement their business model at the same time making financial return, which I would say at that time was not necessarily perceived to be as good as it is now these days, fast forward. It's easy to speak when you look back and respectively. But I'm very curious about this aspect of beating the competitors. I assume, I would bet that more senior than you. So then again, you come as quite a youngster. You have your portfolio of track record, doing internships, working on desks. But then again, so what was your sales pitch? I mean, I'm still curious. Or just the vibe, energy, the team, the network, as you mentioned.
Yeah, so I always get this construct of how we think about building a firm, and we love basketball in Lithuania, so I use that analogy really. I think in Lithuania, like venture capital is 10 years old. I have another hat, which is chairman of Venture Capital Association. So majority of the funds in Lithuania actually do focus on the geography aspect of the focus. So they're primarily generalists, and then they focus on Baltics or Lithuania as a region.
And then they focus on real estate.
That's one of the aspects. But I think more referring to venture capital funds. I think the way I approach this, if I ever come back to Lithuania, the only reason was to come back here because to a certain extent, I had some sort of unfair advantage, maybe from a network perspective, which I still continue to hold and build. And the idea was that I would eventually want to play in the kind of pan-European play. And only you can do that with a specialization of strategy. I think to be generalists in their own game globally, it's really hard because they're established brands. And to be honest, it's impossible to really beat them. So my approach was, from a basketball analogy, let's try to play, sort of national leagues, then we go to EuroLeague, and then ideally the vision is to go to play NBA. That's where, you prove that you can be good in your own game. I think we, with the Fund 1, we're sort of playing the National League plus some aspects of being able to compete with internationally. Given that we had pan-European strategy, I think the Fund 2 is definitely being established a leading player in sort of the EuroLeague context of the basketball. And eventually, if we can be very, successful in that, in our strategy, particularly in climate tech, then off to the races, maybe US or the rest of the world where it makes sense from a strategy construct. Again, each step requires a different team, a different ability to be competitive in your own game, and I would say some sort of skill and timing. So from that construct, maybe what made us win, I think, is just the offering, that type of team that we assembled. So it was people that had, experience working in dynamic environments. So Israel being one of the most successful ecosystems at early stage. So another partner of ours is Mark Vesseling, who was founded 12 companies, have built one of the largest and most successful accelerators in Europe called Startup Bootcamp, and is truly an entrepreneur. And then another one is Nityan Lal, who actually ran a climate-focused fund before. So I think these people were sort of help for me to compensate for the lack of experience and guidance to implement a strategy which we were pretty clear that could be successful if done right. And that's what sort of happened. And I think a lot of here, at least, competitors, if you look at local perspective, they still operate within the boundaries of our country. So I do believe from the day one that I started that this is an international game, but because one day or the other, if we are successful as a country to produce successful companies, the capital will come, because capital is not constrained by any boundaries of geographical constraint. It's usually constrained by lack of knowledge of the particular market, where the risk could be, I would say, unadjusted. And once that risk boundary is, kind of crushed, you'll see capital come from all sorts of the world. So I would say I'm very skeptical on geographical constraint as part of your, let's say, uniqueness of your strategy. So I'm definitely more of a fond of specialization to a particular sector, which you can get a competitive advantage of some sort by understanding that specific sector better than anyone else, especially generalists, and becoming a source of thought leader in that sector, and then building necessary required tools to be useful for the entrepreneurs that you invest. So I think one thing when we ask, like, what is venture capital, the similar analogy what I give is you're there to serve the entrepreneur, not there to tell them what to do. And I think the way capital was perceived, especially in our country, for example, it was capital is something that you induce power. In venture capital, it's the opposite. Capital is a commodity that is very much widely open and available. It's really what comes with it. And that what comes with it is the differentiation factor for a venture capital fund. You can be better with founders, meaning personally, you can have better networks with them. You could be an operator yourself where you can relate to them better. You can be astronomically well at fundraising, helping them fundraise, or you could be an expert leader to understand topic to the same level that they do and be value added or giving a different perspective to it. I mean, obviously, there's the operational things like HR, which are crucially important, marketing and various other things that you can add value. And there are firms that specialize in certain areas, like, more like an agency type of model, like Andreessen Horowitz, for example, where they have a bunch of operators that help these portfolio companies. So for a sector-focused fund, I think our goal is to help them land clients and help them to fundraise easier. So that's the kind of stance of competitive advantage that we went after.
But when you had your first day, with all the money secured behind this fund one, and how did you reach out? Because you are you have this attachment to Lithuania, and I recall this now, the old movie directed. Litu, and I would peep. True. So this sort of, it could have been sort of a disadvantage. Maybe not a disadvantage.
Absolutely, no, it is a disadvantage.
Yeah, if you play basketball, you start playing minus 10 points.
Absolutely, that's true. How does one beat a competition in where one perceives there isn't one, by just doing it differently. I mean, I think we approached every piece of our strategy completely different to how one would approach it. I would say now I reflect back, and it's obviously easier to say it now that we've done some bits and pieces, but at some point you understand that you will be a filler, what we call like someone that will fill holes where there's some room left. I think that changed when we understood that principally we need to be better, and we need to be better at our own game, right? So we approached this a bit of as like a product. So we start to build features in the product that would be unique to us. So everything we sort of took in our hands with questions. So we go to conferences. Obviously, I did a bunch of conferences in the very beginning just to really paint the picture, understand where we sit, like what's relevant, what's not, which investors I should build relationships or not. But it was heavily like taking a map and like figure out how one goes to A to B, and like who are the people that I want to visit between the A and B points. And while doing that, I kind of understood that maybe attending those conferences were like, those conferences are crap, you know, like maybe we build our own.
Okay.
Maybe these conferences, like you want to build a thought leadership, you get invited to them, they ask you to pay like 10,000 euros. We're like, 10,000 euros, we can actually build our own. So everything you approach from an entrepreneur's point of view. Like if that is inefficient for you, you go and build it and do it yourself. So instead of complaining, what normally people do is like, oh, well, that was crap, you know, you actually go and say, okay, sure, I'll kind of try to do it better then. Maybe if I fail, it's fine, I accept it. Maybe those guys are actually better. And if not, then you win in that particular small thing. And we treated it as a kind of, you know, if you have a nice cake, it's just like the icings of the topping. You still have to have the fundamentals, right? So you have to be value added. You have to be perceived well in the industry. And we just did it with better energy, with better approach, more, you know, friendly, entrepreneur friendly. And I think to this date, we measure what we call NPS, so Net Promoter Score for our entrepreneurs. So they're essentially, you are as good as a venture capitalist, your last deal, or as your entrepreneur refers you being good. So really focusing on that front as well. But I would say it's I touched the 1% of I think what we've done. So I think it was just an approach generally to answer that question, to just doing everything a bit differently. I mean, maybe from that standpoint, how we built the firm was the contrarian part of how we felt. Maybe we couldn't fully execute the strategy doing crazy bets and invest in companies that, I mean, are completely, you know, contrarian to their nature, which some investors do, and they're wildly, you know, rewarded for being right. But that is, again, you need to grow into that from an experience standpoint, from a credibility, reputation. And there's a lot of, in venture capital, there's a lot of following aspect of like, if you're a brand, a lot of people want to follow what you do. Meaning, so there's a lot of, I call it winner takes it all type of approach. And in reality, it is not only from how the market functions, it's also from returns perspective. There are funds, I think there's 1% of funds account for, I don't remember the exact amount, but some like ridiculously big part of the pie of the highest returns. So in reality, it is a bit of winner takes it all. Like in any sports career, if you take that narrative in basketball, right? There's only a handful of players that get paid millions of dollars, right? Because they're just kind of the art of being the best, really. And you get compensated unparalleledly a lot for being best in what you do.
And in that regard, you seem to be successful because you're just about to, finalize and set up the second fund.
Yeah, I think so. So successful in this business is a tricky word. You are successful. I call it like, you're successful when you return the money, firstly, for the investor. That's when you could say you were successful once. Doing it 3 times in a row is what you count as successful. And for the listeners that are listening, funds usually are a 10-year period. So you invest for 5 years and then you exit the businesses for 5. So a duration of 10 years. So the feedback loop for you being successful is probably to a minimum 10 years. And that we're just scratching because you've done one generation of fund for 10 years. Usually funds raise new funds every 3-4 years. So you deploy majority of the capital through the first 3-4 years, and then you raise a new fund. So through duration of 10 years, you will likely to have 3 funds. And then the first fund, you already know what the outcomes are at the end of that. So in the venture capital or limited partner community, the manager that manages 3 funds is called still emerging manager. So past what I think when you finish, so 10 years, probably by 10th year, you could say that you sort of, you know what you're kind of doing, and you could determine by your multiple of money that you return to the investors whether you're successful or not, and where you fit when that success rate. It's usually in quartiles and deciles where you sit in comparison with other managers. I mean, sure, we're doing okay. I don't want to be overly optimistic. I think we're doing better than a lot of our peers. on paper. We still haven't returned the money to our initial investor in Fund 1. But there's also some headwinds that are helping us as part of that kind of decarbonization discussion, and where climate tech and importance of the nature where it is now today in 2022. But there's still a lot to be proven, and I think we're just scratching the surface. So I would not use the word successful yet.
Okay.
Time will show. Time will show.
It's for your type of person. I guess this is this is an appropriate approach.
Yeah.
And speaking of your team, it seems to be that your network is based, and you mentioned at the very beginning, mentorship, and this the importance of, right mentors.
Yeah.
And opening the doors, maybe teaching lessons that you would otherwise have yourself, and helping to save a lot of time, tons of time, and so on and so on. Getting back to your team, what is the type of the team? Who are those guys driving the fund behind? Sure. And especially the marketing part, which is amazing. I mean, I can certainly recommend for everyone to go. Just type in Contrarian Ventures.
cventures.vc, yeah.
cventures.vc and check out the website. It's just complete. It is indeed a Contrarian compared to what's in the market.
Indeed,
so.
Yeah,
even NFTs with Trump beheaded, something like that. So
it's still TBD. I think we paused that for a bit because we can't find a chain that is carbon neutral. But we might as well do that later. But so deconstructing your question in 3 parts. So I think maybe mentorship being first one to address. So I think generally one should approach life through learning. And I think I truly love this career as such path, because you are constantly learning by design. You're constantly meeting smarter people than you are in different subsectors of the category that we're looking at. And you're having literally a lot of conversation with a lot of people as part of the due diligence and selection process. Through that, you build some sort of knowledge subset, which gets improved through time. That's why I believe sector-focused funds win. Because with each step, like as people say, you need 10,000 hours to become an expert in something. So truly you are becoming that expert through basically iterations that you do. So I love that part, but at the same time, the mentorship part is important for pretty much anyone, I believe. And mentorship is not just a standalone subsegment that is important. I think learning is equally important as part of mentorship, because if you're just having someone to mentor, you would assume that that person is more experienced than you, meaning there's an implied learning element in it. So I approached that mentorship model from really the early days, back in 2008 when I started my university. We had this great program, I think was one of the first parts of the participants, called Big Brother, right? So I think I was actually one of the first class we got selected. And I remember actually Egis, who's like an oil trader in Trafigura back then, I think now he's in Vintal. He was my first mentor. Then Gedrimas, who's now head of secretary of NATO, was my second one. Then Justas, who's one of the derivatives trader in Millennium, was my third. Actually, they're now my friends, funnily.
Okay, so kudos to all of them.
Yeah, so these guys, I literally speak to them to this day on even a weekly basis. So these guys shaped me through just kind of different aspect of how they approach their careers. And really, I love actually reading a bunch of Wikipedia, and I did that in university as well, just to understand how people approach their careers. And there's no straight line in anything you do in life. It's always a lot of different turns that you will do. And there's no right or wrong that you will take one or the other. It's just how, if you have some sort of a path to what you want to achieve. I think, and when I started my career, my path was to become a trader, and that was very hard to get. Like, it's a very competitive environment. There's not a handful of people that get into investment banking in London, right? And we came from, like, let's say, quite disadvantaged backgrounds of like studying in Lithuanian school, going to not necessarily tier 1 university, and you do a bit of tricks, you do a bit of hacks, you need to do better than that competitor that comes from Oxford University, that has the polished accent and has the pedigree of the best schools, boarding schools, and can maybe speak a better language, but you have to approach it from a personality standpoint, I think. And people do appreciate the personality aspect, I think, a lot. I to this date appreciate in people where we gonna go and hire, right? Because I know how hard it is. So if you do that extra mile, everyone notices who've went through that experience. So I think the way that I approach mentorship is really, at every point in your life, you will have different mentors, different people. The more younger you are, the more unknown path is, the more less focused you are. Sometimes we are focused to get into a certain career, but then we realize it's not for us, right? So the important part is to realize it yourself, And if it's not for you, you quit and find something new. And I think the way I look at it is really, I think at each step in my life, I become conscious to what I start to not understand where I'm going. And that's when you need that mentor, right? And I think now that mentorship evolved into something a bit different for me, it evolved in ability to find a peer group to which I can relate. Similar to psychologists, actually, but just from a different construct, more like from a person, rather than a personal being to more a professional one. And that's the reason why I actually joined Kaufman Fellows, because it's a peer-to-peer fellowship. It's a bunch of 60 people in my class where we don't go to learn. We actually go to learn from each other experiences.
So it's actually share.
Yeah, it's sharing. It's actually realizing that other people running billions of dollars have exact same issues as you do. And that makes you to calm down personally. But on the other side, you're learning certain things of your career that you understand that you will have that problem down the road 3 years, and you could relate to that. Now, what you should do to not have that problem. So I think peer-to-peer support generally is ultimately what you end up being. You want to be part of some groups, and then in those groups, you will identify individuals that you aspire to become. And that will be that individual that you would like to them become a mentor for you. And I do have a few that they're not my mentors, but I actually trying to reach out to them and try to become one for them. And these people usually, the way you relate to is that they see something that they were in the past, right? So they want to help you imply because you're somewhat going for a similar, not this exact same, but similar path. So I think, to be honest, for one's person's involvement, that's fundamentally the most important thing, to become successful. Because from one end, you know what you're going to get from that individual, but it's not one usually way relationship. So if you aspire to become someone's mentee, that mentor aspires to get something from you, maybe a different generational perspective, maybe a sector perspective, maybe something relatable to your geography or your experience, but it's a two-way relationship, right? And it fosters only if it's two-way and that both ends actually have that value created from that exercise. So I would say that there's no time and point of your life to being too early or too late to have a mentor. And sometimes I think what's even more important, sometimes the mentor is usually perceived as someone more older, right? I think what the narrative changes is actually the opposite. I think you could sometimes find mentors which are younger than you because they give you a different perspective. So you don't approach it from a perspective where you want to get something. So like a door open, because that's usually how people perceive it. Oh, I'm going to get this old banker. He's going to be opening a door to a job in the bank. Sure, they will. That's the old narrative. But the new narrative is learning something from it, and learning something that you cannot otherwise access, or that person will give you like a playbook to it because he knows exactly. So that is a crucial part embedded to our culture, what we're building in the firm. We have obviously more junior staff, and we do invest a lot of time, me and Thomas, who's my other partner, in actually nurturing that and giving them ability to learn. Maybe we are somewhat on a professional level mentors to a certain extent, but we engage them to go out and kind of learn from other people in there. And I think this is really, really important. Maybe going to the other part of like the team part and how like we do what we do is the marketing part you touched maybe briefly. Again, we approached it differently. We said we actually went to the meeting with the agency that we worked with and said, so what do you guys want to do? We said, we want to do a Jordan. And when you say someone, what do you want to do at Jordan, it exactly means what you want to do at Jordan. Jordan is the best. It stands out.
Michael Jordan.
Yeah, exactly. Michael Jordan. So you want to do Michael Jordan, and they're like, well, what do you mean by Michael Jordan? It's like, it has to be the best. It has to, like, you go there and you see it, like, it's nice. I wanted that. So I think we kind of approach it from that narrative, and to that point of who does that. I mean, we do that. So I mean, we're very scrappy. We build things ourselves. I mean, at every piece of thing we don't delegate. We want to be part of that thought process. We engaged everyone in the room as part of our team to question everything. Even, there's no hierarchy as per se. It's very flat. Like my knowledge is equal to the knowledge of someone as an analyst. If that's backed by some logic and some construct and perspective. If it's not, then yeah, sure, you will lose that argument every time. But if it comes from a stem of some sort of experience or knowledge and backed by some credible argument, I think everyone should listen, right? So I think that's how the great organizations are built, like Google's and the likes. They, anyone can question anything. And I think that's where, great things happen, because you could right or wrong, and it depends on the perspective. And same with sort of mentorship part. I think that's embedded. If you truly believe that you're the best, you probably already lost it because you're not, because there's someone going to be better. And that's how you should approach life. Even probably 20 years down the line of my career, I will still question that I don't know nothing. Because the more you know, I love this curve, right? Like the learning curve.
Goes up, it goes down. So I'm really curious about your the price aspect of your career, this type of job and profile. So, and you just rushed in while on the headphones, having telco, talking about business apparently, and this is now winter evening. So how much should you be prepared to pay with your time, which is the most precious asset, which does not inflate most time goes by. Well, as time goes by.
True. That's a tricky one. Yeah, my wife doesn't like that. I think generally, the better you become in a job, the better you become with time management. At least people say that. I still don't. I still question that. But maybe less temptations you have when you understand what you're after. The more, like, I think, let's put it this way: strategies are not built by sitting in the room for 2 days. Strategies are built constantly thinking about it and evolving, right? The more you evolve, the better you think about different constructs, how that strategy is shaped, the better you're aware of what you want to achieve. And the more you get fixated what you want to achieve, the less distractions you have in your life. So this job, specifically, someone wants to do venture capital, I would say it just never ends, really. There's no point of where you finish or start job. You're after the best innovation that is out there in the world. I mean, maybe it's happening now. You could question that you should outreach constantly, right? So you put some sort of set of rules how you operate, and you go according to those rules, right? But there's always more. There's always better. So where do you put a line? I think you put a line to just being truthful to yourself, what works means to you. I think it means a lot for me at this point in time, where I think I'm at sort of, let's say, I'm kind of peaking to where I'm in terms of learning, how much information I can get. And I already have a perspective to where I put certain things in when it comes, the information comes my way. But I think, work is if you want to be better, like, you have to do more. So I think if you look at any career of like really, really good, like Jordan's, even a Jordan himself, like there is some sacrifices to be made. And I think, I think you have to love what you do to be able to do those sacrifices. And surely that's a question to ask my wife, whether she's going to tolerate that for how long.
Okay. So sending best wishes.
But I think, truly, I think it is demanding. And it's not someone is demanding it on you. You demand it on yourself, right?
So your own boss at the end of the day. And in terms of possibilities, I really like this quote. I remind from time to time myself, Jeff Bezos, it's always day one.
Day zero. Even day zero.
Or day zero. And besides, Michael Jordan, for those who are younger, who don't know, you can go to Netflix and find the movie, actually the full season, and it will answer all the uncertainties about dedication and about liking work and aiming out to be the best. So,
I think, look, in the business construct, we don't look for companies, right? We invest in early stage companies. We look for people at first. So not people just first because people say people first, but truly people are the ones at the initial stage of the company build the company. And I think what you look for in people is just conviction, determination, perseverance. And those are all things that make someone successful. It's not luck. There is luck in everything everyone does, right? And no one should underestimate, even ourselves. We're very much aware that we got in a time where our topic that we invest became very, very much articulated and important, right? And that's just the way that you go with it, right? But the way you approach work is very important. If you're not persevering, drop every time you kind of have a problem, you will fail, obviously, right? So I construct to, like, the knowledge increases the more persevere you become, and the more failures you have or things that you get struck into a wall, the more like tough skin you build, and that perseverance reinforces, right? So you're like, okay, it doesn't work. Okay, next one. That's because some people get stuck in this. Oh, it doesn't work. Oh my God. Okay, I'll drop it. This doesn't make sense, right? But then you have to be super convinced on what you're doing that is right. And there is like a boundary, a clear boundary where you can become fanatic or something, right? So you need to be aware of the kind of environment around you. But I think truly, if you like what you do, like time, you will see if you organize time efficiently, right? Because that will turn out into successful or unsuccessful endeavor. But I feel like, I constantly think about things, even though I'm at home, like, and it's just because I'm curious, like naturally curious about it. And I think someone has to be naturally curious if he wants to be successful in this business, because it's all about consuming knowledge, interpreting in your own way, and making rational decisions and to act upon them. And that's why I fascinatingly look at any investor in the world, the most successful ones in the hedge fund world, not necessarily venture capital, like Soros or Paul Tudor Jones or
Chris Sacca, I think.
Chris Sacca, for example, in the venture construct, they're very disciplined, but at the same time random. Because you need to sort of constantly question the construct of what you're looking at. So you look at this thing and you think that it's true for what you see, but you need to question whether that makes sense at the first place, what you're looking at. So I truly find it kind of rewarding, but at the same time very mind-boggling, because it could get lonely when you're going on that rabbit hole with no like light and kind of still thinking whether I'm right or wrong and I'm wasting my time here. So I think definitely not for everyone, this career.
So I was going to say, it sounds like it's a campaign and you are the leading warrior, or together with your co-generals.
But like don't you know, I think in the construct of firm, it's not the same. No, right, I think we're a team and we act as one. I think for any investor in particular, you have to have your way, how you approach things. And I think it's just how you operate or how you perceive the world, right? And how you connect the dots, because that will be very individualistic. When it comes to firm, we're very much aligned, we're trying to achieve. And everyone's opinion is equal in the investment committee. It's just that different people bring different perspectives, and different opinions are not only nice to have, it's a must-have in a discussion to make a rational decision. So I would say, we're definitely not a Cowboys type of shop where just one guy puts a hat and goes riding and finding. So we're very much collective as a team, and we make together decisions. But I would say each one of it has different profile of how to approach things and strengths. And I think we call it in the Kaufman context a zone of genius. So you truly become good at something when you understand what you're genius at, and you cannot be in 10 things. You have to be at one thing. And you have to be so good at that thing. And that one particular thing, you have to master it and craft. And that's how you become good, by going to the other best person that is good at that, and you know it. And might that person not necessarily be in the venture capital. Maybe it's one of the most famous chefs, and he just does this thing in particular, right? And you can learn like a lot of things from it. Or you go to a sportsman and he's very competitive, right? Let's say you want to be best guy winning the deals or closing the deals. So you go to someone that is an individual sportsman who like has this grit and personality thing to win this kind of thing. So you choose your own profile, you choose your own style, and you kind of try to craft it with that one feature that you think you can master and become that in that zone of genius. So I truly, I think, follow that narrative of how I think about building our own theses as individual investors, but collectively as a firm. And collectively as a firm, it's always not the personal brand, but the firm's brand that is more important than a personal brand. And I truly believe that that's the way to win long term. Because if it's just one individual, everyone makes mistakes, really. And it's too much risk to put that one thing in one basket. I think collectively you're way stronger. So that's the reason why we have such a outspoken and very kind of, I wouldn't say a different brand approach the brand, because we truly want to be known for the brand, not for an individual.
But speaking of your leadership, you are a very, very active, open guy, going to speak in public, and like tonight sharing we can see secrets. Behind that's not something very common in Lithuania, and we see not yet, or not up to this point. So I take it as a distinction. So you have this energy, you have this uniqueness as a VC representative. So no. Yeah,
I think about it very simply. I truly believe in openness of the value of the conversation. I think we do it everything in our own lives. I think we do it. I'm a very direct person, so I truly say what I think. Some people don't like it. I kind of don't care about it because I think there's value to being transparent, because then it's a dialogue where you say yes or no. I like the Israelis say, you're either a friend or a brother. There's nothing in between. An enemy or a brother. There's nothing in between. And I truly kind of like this because you just waste less time by being kind of fake in the moment. But I think to the approach where I took a stance of being kind of open and speak and do things, because I think there is some necessity around the topic that we are part of. I think climate has one problem. Climate change has one problem. It's the time you have to solve that problem. And you're running against time. So I think you have to be open in the construct of sharing ideas and being collaborative, really. And I think, to be honest, one thing that I really kind of made sense for me for my career is that doing it in silo is never a winning strategy. I think being collaborative is usually a win-win if you truly aspire to make it a win-win. And when you truly make it aspire to be a win-win, just magic happens, I think. And some things happen maybe 5-10 years down the road where you invest in something. I like the saying of Sicilians have the saying is like, I don't do favors, I accumulate debt. I don't look at it like that, but sometimes we do kind of come back and say, hey, dude, we've just done a favor for you. But like, could you like introduce us to that? And people do that because they're truly, honestly, would like to help you because you helped them, and maybe at the crucial time when they needed that help, right? So I think you just don't look at it as a transaction. You look at it as like, look, if I have something to share with you and it's relevant and you can relate to my opinion, surely that's something that's meaningful and valuable. And I think these type of things, I think when we were, it's just like maybe moment down my memory lane. When we were in university, I remember with like Thomas, even we shared the same apartment with some other friends of ours, and we sort of like opened the book. I think it was second year of our university, and we're like, okay, so like this investment banking probably pays really well. How do we get there? And we're like, Glasgow University. No one comes to our university, and we're like, so what should we do? I think we should just crash the LSE like fair, like jobs fair, and just like kind of show up there. So we took like a megabus, which at the time I think is like for those who live in UK probably know, it was like these cheap buses that would go for like £6. We took like a 12-hour train from Glasgow to London, which was like a really not pleasant ride. And then we drop into this LSE jobs fair, and then like people were like, where are you from? Like Glasgow. I was like, what are you doing here? I was like, you guys don't come to us, so we come to you. So like doing these type of weird things is what makes you stand out, and people are like, okay, I remember that guy. Okay, so I think you try to be a bit differently, not like kind of in a cocky or weird way, but like you just take what you have and you make the best of it. And I sort of see that if I have an ability to express my experience in different ways or create things that I think could be valuable for someone that I was when I was 10 years ago, I do it, because if I was in that position, I would love to hear that opinion. Not necessarily take every word for granted, because my journey is different for anyone's that listening to this journey, but maybe you'll find something that you will apply to your life. And I think people should never advise other people what to do. They should explain their story, and other people should relate to their story one way or the other and apply to their own lives. That's why I believe mentorship is so important, because you should not go and learn how it's done. It's not like fully an apprenticeship. It's like, oh, you did it that way. I can relate to that in my life. And I will take that bit of piece of advice, not necessarily directly, and apply to my life. And I do that. And usually these things are not specifically email that to that, but it's more like, okay, so you approach this problem like that, deconstruct that problem and approach it in your own way, in your own setting. I love that, because it's what makes you to do something that other people don't think about.
Indeed, that's a deep digging. I would say that's a deep digging, because
I've done some weird stuff, like to email people. I mean, seriously, I've approached it that way. Like, there's not a single person in the world that you cannot reach. I think truly there is not a single person you cannot reach. I think you reach presidents of the world if you want to. And actually read a book, especially what's interesting one is like letters from like the past. And there are letters like Elvis Presley writing to president, and stuff like that. And these people like went out of their comfort zone and done weird things. And 99% of the time, these things don't work, but there's one that works, that defines your life sometimes, really.
It's all in. Rokas, so what is your 10-year horizon? There is not much time left. If we believe to save the world, then it's sort of I don't know, self-defeating or self-devastating, but at least we got to try. But for you as a VC professional, and I would say I would pay this recognition as in Lithuania, I would say at least $100 million guy. So
no, I don't think it's measured in terms of wealth. I actually kind of went a bit of rabbit hole in terms of thinking, well, like what I want to do for like next 20, 30 years. I just got like a daughter born 7 weeks ago. Actually, no, 8 weeks ago. It's 2 months yesterday.
Congratulations.
Thank you. So that was a defining moment of like thinking like, so what do I actually want to do? And it's relating to that, but how much do I want to spend time in my life, my work and my personal life? And the way I thought about it was in a construct of net zero goals. So I was like, okay, I'm 32 now. So by the time it's 2030, which is the first net zero goal, I'm going to be 30, I think 40. Yeah, I'm going to be 40. And then by 2050, I'm going to be 60. So I was like, okay, I want to retire at 60 probably. And I want to hit $1 billion AUM by 2030. So that's when I'm 40. So that's like big construct. So like 2040, 1 billion AUM, which is assets under management. And then 2050, I want to retire, meaning financial freedom and doing whatever I want. And most likely, if I do be successful financially in that construct, I would probably do nonprofit stuff and just kind of come back to those kind of topics that I think means for me, and that might most likely be related to climate. But not necessarily philanthropy, but doing active sort of stuff. So that's kind of I think, thing that I would love to do. And hopefully through those steps that we go, there's this, we don't blow up as a Earth with this climate mess that we've got ourselves to date. But fundamentally never stop learning at each point. I think there was, I did a bunch of tests where people say that if they truly are passionate about something, and they find it early in their careers, that's what makes them actually successful. So hopefully at this point of time, I believe that what I'm doing is really, I'm in this kind of zone of genius where I found like I'm happy what I'm doing. And I hope that continues till that, those goals are kind of being accomplished. And then at that point of time, you kind of want to be happy with yourself, what you've done. And I think the topic that we're addressing probably make me happy myself, and probably my kid when they grow up is going to be somewhat proud, at least we achieved to a certain extent. So I think those are two the fulfilling pieces that I sell to myself. Okay, that maybe could be a good 10-year or 30-year goal for myself being old. But these things are dynamic and change. I don't know, maybe we'll go surfing in 10 years if we do super well.
Don't forget, let's not forget us insider. So now going to final stage of our podcast, I'd like to ask you about your free time, human being, because this sounds all atomic guy. It's all disciplined and willing to learn at this learning curve, also very rational, ambitious, and so on. And your free time, you're a father now, you are a husband. And there is this story of a personal life. We just missed it briefly. So this personal life and any hobbies besides, you mentioned surfing, or maybe some, I don't know, Teslas, fancy EVs, whatever is that.
Yeah, this is actually, I kind of thought to myself, like at some point I was like, I'm kind of delusionally going into these rabbit holes of like just kind of thinking all the time and like really not leaving any time for doing anything else. Through COVID, I just started drinking a bunch of wine and I kind of got interested and then kind of dropped it. So I'm a bit of ADD type of person, so where I could pick up something, it's interesting, and then drop it because I truly didn't find it interesting. I think I just generally like socializing with people, and I kind of like it. I mean, I seldomly watch Netflix as well, but I think I do enjoy company, and usually more so as I grow up, a company that is completely different to my centric friends circle. So someone that is fascinating, let's say cook, or someone that is fascinating in the sportsman. Just speaking with people that not necessarily professionally clearly, because I do all the time to professionally a lot of people, but to find people that are just have a different perspective and learn from that. And that's just basic things, really. I don't have any kind of crazy stuff. I do like to run a bit, but I think I'm been slacking too much on that front. And I do enjoy a good movie or a good drink. So very, very earthy and simple things. Hopefully, I mean, travel has always been passion. COVID obviously killed it. And I think now, as you mentioned, I kind of came back from US. I just kind of constantly, when I travel, I remember how I enjoy like being in different places, learning cultures, and that's still part of that construct of being social and meeting people. Like I think at this point of time, I could say that no boundaries of like having conversation, like literally when I step out of any place in the world, and I truly enjoy that, and that's part of still kind of questioning everything, which really feeds to like turning a different perspective, and that's how I think I approach. But I think implied in some places I'm pretty lazy, like on the activity and sports side of things.
Okay, so
which I definitely need to polish more on as we go. But hopefully these kind of materializes. There's more time to put in that. And I know health is very important, and I think that I should more frequently remember.
Okay, so noted. Your final thoughts. You said that you're not willing to perhaps give advice because but your philosophical, there has been a lot of good stuff and content previously that you said we can summarize, but maybe in a final twist for a young ambitious guy watching us or listening today, willing to open the VC or I don't know, investment or trading wall doors. What should be these fundamentals and basics?
Okay, so I think I've never been a good student in school, especially.
Okay, so that's promising for.
yeah, but what I'll take what my learning from it is. I think generally everything in the world is very simple when you deconstruct it. So when you learn about the subject so much, yet you have this enlightenment moment. It's like, was that simple? You know what? I don't know if people get that sometimes. Or you get to the bottom of something, you truly understand. You're like, that was so simple, because you overcomplicate things when you try to learn because you absorb so much information. So I was way better at university, and I graduated first up my class in university purely because university is so different from school. You're not set of rules where you have to kind of fit to it, and there's like tests and things like that. University is more open, especially in UK. It's like you read a lot, like it's more constructing your idea. So I think what I learned from that experience about myself is that I don't operate well in like very sort of rigid kind of, created boundaries. So trading was like a really bad career for me. I hate it really. It was just like you constantly like killing yourself inside, because I was so good in like interpersonal skills. So speaking with people, and then you have 8 screens in front of you and a squawk, and you speak with 4 brokers and maybe 6 traders around the world. So that was like kind of not for me. So my truly kind of 2 things that I want to kind of suggest to people how they approach. Firstly, try to understand constantly what that zone genius, what that one good thing that you're good at. And the earlier you're going to understand that, and it not necessarily needs to be professional, it could be completely interpersonal personality type of skill. So try to understand your personality and don't lie to yourself. So don't impose to be someone else that you actually are. This is the worst you can do, really, because you will truly not understand what you're good at. I think that's one bit. The other bit, don't fight it. So don't go to study something that you don't want because someone is imposing you to do that. Don't go to do careers that someone is imposing you to do, because you're going to fail them one way or the other. I think no one became Michael Jordan by doing something that they don't like, right? And then the last bit, if you truly want to become good at what you do, you have to fundamentally question that thing that you approach. So you have to take it like an onion, deconstruct it. You're going to cry a lot and just you like peeling everything. But that crying will give you ability to like decompose that thing. And when you decompose, you'll have that aha moment. And then you maybe realize that there's another 10 aha moments that you have to go through, but you will understand that at the core. And I think a lot of people get in this noise of like a lot of information and like, oh my God, this is technology so complex. Everything is so simple. I mean, technology is not a new thing. Rockefeller built an empire on technology, was that back then oil. And that became fundamentally commodity of choice for the 100 years. And he did nothing other than took a bet on a technology, funded it, was wise man, obviously, for multiple respects and influential, but he built that influence. And so can you, even in 21st century. Maybe you'll be good in NFTs and you're going to corner it, but don't try to ride it. Like, don't try to like scratch vanilla surface. Go like really deep in it. Understand technology, question everything, speak to people that are smarter than you. And once you deconstruct and you go deep in it, you'll have that aha moment and you will understand that there's something for you as a piece to be done maybe. And maybe you'll come up with something that is unique and innovative, and then go for it. Don't question it. Don't overthink it. Just go for it. You will make mistakes down the road, but just go for it. And I think the worst thing that can happen out of that experience is you're going to fail and learn something. and then you will attempt another thing and you will implement those learnings, and then you do something good eventually. But like being afraid to fail and not digging deeper is the failure in its own right, because you will never know what the outcome is.
Rocky, I really want to thank you for showing up tonight, for finding a spot in your busy schedule.
No, absolutely, always. I think it's a great thing that you do, and I really, really appreciate it for the invitation. And I think this is a phenomenal, exercise that you're doing for the younger generations as part of it covered on mentorship. And I think this is truly how one learns and hopefully takes bits and pieces and implements in their own life.
So this was our portion of inspiration, hopefully advice from the VC industry. So see you on the next episode.